Hello, gentlemen. My name is Greg Michalowski. Today's date is January 5th, 2015. I'm going to do a technical review. I'm going to take a look at just three currencies in about 5 minutes. I'm going to start off with the euro versus US dollar. Let's go to the monthly chart here in the euro. And what do we do in trading here today? Well, under a lot of pressure. Why? Because low inflation, Greek election uncertainty, lower growth. Just an overall bearish sentiment for the euro versus US dollar as we head into the new trading year. The price in that currency pair fell below the 118.76 level, which is a 2010 low price. That was during the last Greek crisis, or the first Greek crisis, I should say. And the market at that time was talking a lot about the euro going to parity. Well, it didn't, and the market rebounded all the way up to here and then been consolidating. Well, we're back down to that 118.76 level, and coincidentally enough, or that we have some more crisis in Greek and also weaker growth / inflation / deflationary pressures in the euro, pushing that pair to the downside. So the 118.76 level is a key level. We did, as I mentioned, move below that level, but it was in the first 5 minutes of trading that the market fell below that 118.76 level. And since that time, as you can see, this red line represents that level. The market's been able to stay above that 118.76 level. So we're finding some support buyers against that level because risk can be defined and limited against it with stops below it. So traders are going to come in, lean against that level, buy against it. If it goes below it, sell it back out. So that's how I see the euro versus US dollar on the downside. We need to get and stay below the 118.76 level to keep the pressure on. Now on the top side, what we notice here on the 5-minute chart, and this is why I put it up, is that we've at the 200 bar moving average on the 5-minute chart, we've had 1, 2, 3 different times where the market tested that level and stayed below that level. So that's going to be really close to resistance in trading here going forward, and we're just a few pips away from that as I speak. But if we move above that level, we could see a move back up toward this area right here where the 120 to 119.76 level is, and this level represents a little bit of a gap between Friday's close and the 5 p.m. opening. We did not move and close that gap in trading here today. So if we do go higher and get above this 200 bar moving average, that will be a target on the top side. First the 75 level and then the 120 level on the top side for the euro versus US dollar. Let's take a look at the sterling versus US dollar. I'm going to again start off with a longer term chart. And if we take a look at this line right here connecting, well, this is a low going back to 2009 connecting to the low so in 2013. The trend line comes in around the 118.45 level, or I'm sorry, 152.45 level. Got the euro in my mind. 152.45 level is where that trend line slashes across. Now this yellow area right here corresponds with lows going back to 2011 and 2012. You can see those lows right there. In 2013 we kind of made a mess of that floor area right here with the market consolidating before moving to the upside, but nevertheless the market remembers that, and so we are finding some consolidation here in between the 152.32 level and 152.70 level. You can see that on the 5-minute chart. Here's our 32 level right here. Here's our 70 level. Didn't really get anywhere near the 70 level in trading here in the New York session, but and we traded below the 32 level on 1, maybe 2 or 3 different occasions here in the New York session after moving back above it right here. So there is a little bit more of a buying on a dip type of scenario here. Here's our 45 level. That's that trend line slashing across from the 2009 low to the 2011 low. And if we are able to get above that 45 level and then get above the 70 level, could see further upside potential here. Just like the euro versus US dollar, have a little gap here between the low from Friday's trade and the high in trading here today. So that might need to be filled if the market is able to get and stay above the 152.70 level. Keep an eye on that level. Let's take a look as our final currency pair, the Aussie versus US dollar. I'm going to start by taking a look at the weekly chart of that currency pair here too as well. Why? Because we did move a little bit below the lows going back to 2010. Those lows came at the 80.66 level, and the market low in trading here today came in at 80.34. So we did move below that 80.66 level. Going to the well, I'm going to take a look at the hourly chart here, and if we take a look at here's our 80.66 level. The market moved below that level early on, and then made new lows during the late Asian session, I should say. But then started to move above and spent the last 6 or 7 or so hours above that level in trading trading New York session. Now, the one thing that we are doing on the top side is finding resistance here against the 81 to 81.08 level. This low came in at 0.65. These lows came in around the 0.3 level, and then this lows came in around the 0.8 level. So a number of different lows here between the 1 and the 8 level, or I should say 0.3 level and the 8 level. And as long as the price remains below this yellow area right here, the bias remains to the downside. If we move above that level, that would be more bullish here for the Aussie versus US dollar. Trade data coming out of Australia tonight, so be aware of that. My name is Greg Michalowski. This has been 3 Currencies in 5 minutes. Good fortune with your trading. Bye-bye now.